Ladies and gentlemen, welcome to a new episode of the Fintech Hunting podcast. We have two guests for you today. They're amazing guests. They're industry thought leaders, trendsetters. We even have a former pro football player. They're automation experts. Please help me welcome to the show Charlie Johnson and Michael Schwartz. They are both with Nationwide Property and Appraisal Services. Guys, welcome to the show.
Awesome.
Hey.
Energy.
Yeah, I love it. Happy to be here.
All right.
Cue the crowd applause. That's great.
Well, it is great to have you guys. You guys got a wealth of knowledge and expertise, and it's an interesting market. Before we dive into the market, I always like our guests to give a little bit of their background. Charlie, I'll start with you. Michael will come to you next, but tell us a little bit about your background. I know you're a former pro football player. Tell us about that, and then tell us how that applies to some of the lessons you learned there into the mortgage and appraisal space.
Of course. Yeah, I'd love to. Started, played football a little bit here in the United States. Did dance around in the NFL and a couple practice squads. Went over to Europe. Played quarterback all my life. So obviously learned a lot from how to manage multiple personalities, if you will. How to bring people, the collective together to work as a team. Played till I was about 30, so I had to catch up from there. And actually my experience from the mortgage side was very limited, other than my father was on the origination side for about 40 years. So a lot of dinner table conversations and things like that. And fast forward to about 2016, I was linked up with another AMC owner in the Mid-Atlantic, and he said, "Hey, you seem like you got a good head on your shoulders. You could definitely sell. You can work a rapport, work a room, that kind of thing. So let's give it a shot." And I ran the East Coast for him for a couple of years, and then moved on to Nationwide to bigger and better things, if you will. Been here for about 6 years now.
Outstanding, Charlie. Great background. I'm going to come back to you with some more questions. Michael, tell us a little bit about your background before we start diving into all things AMC, valuation, and mortgage.
Yeah, absolutely. I graduated college with a degree in accounting, believe it or not. And market wasn't great. It was after the 08-09 crash. So I was full-time bartending and somehow got hooked up with an AMC that was just getting off the ground. I think I was the 5th or 6th employee of the AMC as they were just kind of growing and getting things going. And I was started off QCing reports, doing quality control, just reviewing reports. And I liked it. I liked that feeling of growing a small business, and just bought in and went all in with it and worked my way all the way up the company to running the operations side. And then we merged with Nationwide, I think 4 or 5 years ago. And I went from running operations over to the full-time sales side. So using that kind of knowledge, the analytical brain from accounting, but then also the selling side from being a bartender, and I've kind of merged those two things together to kind of get to where I am right now.
Well, I love it for a number of reasons. For one, you guys both have very diverse backgrounds, but that's, I think, one of the things that makes the mortgage industry very special. It's people that most of them didn't go to college and say, you know what, I can't wait to get in the mortgage industry. I didn't say that. I see that you guys laugh, and you guys didn't say it. And most of the people I know didn't, but I think it also adds to a very dynamic workforce that can share and bring in those unique experiences, whether it's quarterbacking a football team, whether it's leading an accounting department and then taking over operations. There's skill sets that translate to help people be very successful in the mortgage industry. So I love hearing about those backgrounds. Charlie, you're the first pro football player I've ever had on the podcast. I have had NASA scientists. I've had professionals in a lot of other fields. One was a musical representative for Tone Loc back in the day. So we've had a very interesting group of guests. So welcome both of you. So let's talk what's going on in the industry. And what I mean by that is, we know it's a tough market. We know volumes are down, but what are some of the things you're seeing? Where are lenders focusing, or where should they be focusing their time and their energy in today's market, especially as it relates to appraisal, AMCs, alternative valuation models? Charlie, I'll start with you.
Sure. So obviously, as the rates went the way that they went, and through the roof, basically, we saw a lot of more attention being focused in the we'll say non-QM space. Traditional lenders trying to create or open up a new revenue stream for themselves if they didn't have it already, as well as obviously the big heavy hitters that were in that space for years past, and they just really leaned in on some unique products. Short-term rentals was a really big hot topic for the last couple of years, and investors are a little bit less rate conscious or rate sensitive, if you will. So that
Right.
was a big reason why. And then, obviously, alternative valuations was another huge thing that we really, as a company, needed to stand up. And in January, we stood up our own division with the help of our CIO, Mike Kirk, and his team, Chad, I believe was on your show as well. And those guys have been instrumental in getting us, out in front of, the new trend that was coming or has, and had been coming for years, but it was finally here.
Excellent insights. Michael, share some of your perspective on that.
Yeah, same thing. The alternative valuation part is big right now. With Fannie kind of changing the way they handle their waivers as well. You really have to be able to provide that for your clients. Communication with them. I mean, as far as what the lenders I'm seeing doing on my side, there's a lot more qualifying income type stuff going on where we're seeing orders coming over where focusing on borrowers who maybe own a second property or using rental income from a second property to qualify for the loan they're going for, that they're currently purchasing or wanting to purchase. Social media, you kind of see that pickup of what lenders are posting on social media. They're all going on very hot, heavy ad campaigns as well. A lot of my clients I follow on Instagram and stuff. I mean, it's picked up quite a bit from what it was a couple of years ago. I think we all have a little bit more time on our hands to start pumping stuff out. So, you got to keep your name in front of people.
Well, you bring up social media, and I'm going to come back to that in a second, but let's dive a little bit deeper. There's a lot of talk in the industry about appraisals, about appraisers aging, about, what are we going to do as the industry and what can we do to lower cost, improve turn times? What are some of the things you're seeing as it relates to that? And what are some of the incredible things that Nationwide is doing to address that to better serve lenders' needs in this market? Charlie, you want to go first, or
yeah.
Michael, you're ready. Go ahead.
Yeah,
He was all queued up.
I was ready for it, man. Well, one thing we've done is we've stepped up and started a program as well on our side as far as staff appraisers go, and making personal relationships and actually getting appraisers who directly work for Nationwide to kind of help solve that problem and almost guarantee some good appraisals, some good turn times in specific markets that are needing it as far as high volume markets. So we kind of stand out and get put at the top of the list priority wise on appraisals. The aging out thing, man, it's tough. I honestly don't know how we might solve that problem in 5 to 10 years. If you ask me, I mean, it is a very big problem, and I think it needs to be creating more programs to help ease new appraisers into the industry. And that's something I think we're looking into doing with that staff appraiser program as well.
Charlie, give us some of your viewpoint on that.
Yeah, I think as far as the aging appraiser, it's a big concern for us and our competitors alike. It's got to start from the top, though. The legislation has to be adjusted and the rules and regulations have to be adjusted to allow like Mike said, just a little more ease for someone to get into this industry. The requirements of 4 years of college and then all of the hours of being an apprentice, it's outrageous. We can have home inspectors get it done in a couple weeks. From a standpoint of an education standpoint, and
Right.
They're doing something similar. They're going out, they're viewing a property, snapping pictures, and that kind of thing. So while the staff appraisal program has been great for us in trying to, bring in and encourage new people to come in and just work for us, but also if you need extra hours, sure, we have someone that you can learn under, that kind of thing, which has been very helpful.
Well, and I think that's critical as you start looking at, right? I mean, you could originate billions and trillions of dollars, and the originator doesn't really have to have a certification process.
Yeah.
They don't really have to say, well, they really know mortgages or they don't know mortgages. But with the appraiser, like you said, 4-year degree and those requirements. And I think it also leads into the discussion of how can technology ease some of that burden. And some of that is the alternative valuation models, right?
Yep.
What are some of the other ways you guys are seeing technology being used to help alleviate some of that burden? I didn't say eliminate, because, right, I mean, it's not going to eliminate it, but what are some of the ways? Charlie, we'll start with you on this one.
You know, we've seen a lot of cool things pop up over the last few years to try and we'll say, speed up the overall process to help, like you said, alleviate these guys from having to go do multiple inspections in a day, to be out on the road, which, is me and Michael can attest to, like, you're in the car for hours on the road visiting clients. I think takes a toll on you, even us as young guys. So, these guys, 60, 70 years old, spending a full day in the car is brutal. So, as we're trying to get we have a new apps that we try to, implement into some of the inspection, whether it's a inspector or the actual homeowner, they're going out and they're assisting with the inspection and getting that submitted and back to the appraiser, so then they're sitting at home working on multiple reports at once. That's one way that we're trying to get these things rolling. Like we've seen this attempted in multiple different ways. Other companies sending out cameras to a homeowner and submitting it back through the mail, and just it's whatever sticks. And honestly, right now the app has been working for us, I think, pretty successfully.
Well, and I like the app approach. I mean, I have heard of the camera and everything like that, but you're like, how many people still even use a camera anymore? They got their damn phone, right?
Right, exactly.
So if they can use their phone and use a mechanism that they're used to using, and all they've got to do is digitally send. I mean, if you have to put the camera in the mail, and even if it's a postage, paid envelope or whatever, it still takes time to get through the mail. The mail is slower than it used to be.
You got to find a post office. You can't find those anymore.
Yeah, and are you then really cutting much time off of it, or are you just leaving it? Whereas, to your point, and I think this is really critical, if you can put the tools in the hands of the person who is selling the home, and then get that info and that data to the appraiser so they can be sitting at their desk handling multiple reports. I don't know what the numbers are. You guys are pretty better equipped than I am, but is it a 2X? Is it a 4X? Is it a 10X productivity by that appraiser if they're sitting in front of their screen going through all of those files, then driving hours upon hours on a day? Michael, you want to share a little light on that?
Yeah, I mean, I would definitely say it's probably a 4X number. I mean, because if you think about it, the way appraisers will typically schedule their day is depending on how busy they are. If they got a pretty big workload, they could probably maybe schedule 6 inspections in a day max. And so they're spending an entire day in their car, like Charlie said, inspecting those properties, but then it's going to take 2 or 3 days to write up all those reports after the inspection. And on top of that, they're handling revision requests, final inspections coming over from previous orders. So then they got to kind of schedule those on the fly, because usually we're trying to close, within 2 days of getting that final order. And so that messes up that writing up process versus they're barely out in the field. They're sitting at home in front of that desk banging out reports. I mean, you got to think that productivity level's got to fly through the roof. But at the end of the day, we have to get the loan programs to accept those types of desktop appraisals. That's the ultimate end at the end of it. It's like, those are great, but not all loan programs accept that type of appraisal.
Well, and I think that's another interesting point that you bring up from a regulatory and a compliance standpoint. You can come up with all of these great tools, you can put them all in the hands of the appraiser and of the lender, or I should say the homeowner who is selling their property. But if those aren't accepted, if people have to jump through hoops, if the investors are not going to buy those pools of loans, then we're kind of dead in our tracks. And I think that's why you see so much push and so much lobbying for, we've got to change the regulation, not just the age on and the requirements for the appraisers, but we also have to change what's acceptable, what's not acceptable. Hopefully one encouraging thing is during COVID, people adjusted and we still got stuff done, right? Because during COVID, a lot of home sellers were saying, I don't want anyone coming in my house. We didn't know what the hell COVID was. People were kind of freaked out, and they're like, their appraiser's not allowed to come in, but I need to sell my house. And the industry reacted. So I think the technology is there. I think like you guys had mentioned, we've got to get the regulators on board. They have to make some of these adjustments so that we can continue to move forward as an industry. What are some of the other things you're seeing? Is there other technology out there? What are some of the big uplifts that your clients are getting from working with Nationwide? Whoever wants to jump in on that one, go, Charlie. I see you grinning.
Yeah,
So
go
it's
ahead,
yours.
Charlie.
You know, I think that, one big advantage that we bring to our customer base or our partners, if you will, is there's guys like myself and Mike out in the field. We have a large sales team. And I say large, we have about 16 people on the road dedicated to servicing the customers face to face, being at conferences and shows and doing office visits, when they're in the office, since COVID has kind of adjusted some of those things. And I think that's a huge benefit. For so many years, all I heard from lenders that I would meet with is I've never met anybody from an AMC. And at the end of the day, this is still very much a face-to-face, a relationship-based transactions and a relationship-based industry, and that has to happen. And I think that's a huge thing that we bring to the table in the appraisal industry and just in the mortgage space in general. And on top of that, we are continuing to grow, which is fantastic. Acquiring and partnering with new companies more and more every year, and we're not stopping. So which is nice. Moving into markets where traditionally maybe us or another company may have struggled, to
Right.
find qualified people. And we're in a fortunate enough situation where we can partner up with some of the heavy hitter regional kind of players there, and really bring that next level of service to our partners.
So Charlie, you mentioned, and Mike, I'll come to you in a second. You mentioned, how the importance of those face-to-face meetings. Talk to me about some of the upcoming conferences. Are you going to be at MBA Annual? What other events can people meet you guys at? Give us some background on that, and what's the best way for people to schedule time with you?
Excellent. Yeah. So I will be at, I like to get into a couple of different segments of the market. So NLE, which is, private money and non-QM kind of space. That one is the first week of October. Actually, Mike and I will be there. We're doing some live interviews for our Value Nation podcast. So if you're in the area, that one is down in Palm Beach.
West
right?
Palm Beach, yeah.
West Palm Beach, yeah.
Yep.
So we'll be doing that as well. And then following week, I will be at MBA Annual. It's actually one of my more favorite conferences of the year. It's huge. Everybody always wants to meet. They always want to talk. And let's be honest. Like we've been in the industry for a while. Our company's been around for a long time. We already partner with many of the people there. It's more about like I said, the face to face and continuing the relationship building, and meeting. Hey, there's some new people we've seen people in this industry jump ship every year to a new company. It's always good to reconnect and say, hey, where are you at now? And just keep that relationship stuff going. And I oftentimes I'll throw out my Calendly link on LinkedIn, other social media platforms. You can always reach out directly to me through email or my cell. Everybody has that now, I feel like.
Perfect. Well, I look forward to meeting you in person in Philly. I know I'll be there with my media partner, Delilah, so we look forward to that. But you mentioned social media, and so Michael, I'm going to come to you. I understand the importance of face-to-face meeting and the power of it, but how do you then leverage social media to make those interactions even more powerful? And how do you leverage social media to continue to foster and grow those relationships? What's your kind of view on leveraging and using social in this industry?
Yeah, I wish we had Jordan here to talk about it. Jordan's our head of marketing, and we call her our boss when it comes to our podcast, because she's always sitting there watching in the background, handling everything for us. But no, she's great. And as a sales staff, we have made an initiative where I think she posts about 3 things a week, whether it's celebrating National Donut Day to putting inspirational stuff on there. And then obviously sharing our podcast and things we're doing. And so we have a big push for our salesmen and our entire sales team that is quite large for an AMC, actually, to all of us reshare it, repost it to our various social medias, following your clients, following the mortgage companies that you're with, following the branch managers, and, developing a personal relationship, liking their picture, and talking to them, they're posting it's homecoming season, right? Everybody's daughters or sons are going to homecoming, commenting on those pictures and like getting to know them on an actual human level and becoming friends versus making everything seem so transactional. And it's because you really want to. It's not because you're trying to trick them. It's because you actually are wanting to get to know these people. That's invaluable.
I love how both of you mentioned it's about the relationship.
Yeah, absolutely.
Right? I mean, at the end of the day, whether volumes are going through the roof or they're slow or whatever, at the end of the day, people are still going to purchase from people they know, people they trust. And you've got to foster that relationship. And Michael, you and I were talking prior to the start of the podcast of how important it is to foster those relationships, even if it's a down market.
Yep.
What a lot of people do is they pull back, they stop communicating, and that's the worst thing you can do. So I love that you guys are not only out there going to the shows, you're using social, you're interacting, and you're building and growing those relationships. You guys mentioned your podcast. I'm a big supporter of all podcasts. So give a plug, whoever wants to. Give a plug for the name of your podcast, where people can find it. I want to definitely encourage it. Charlie's putting on his hat and he's going to promote it. So Charlie, the floor is yours.
Don't mess it up, Charlie.
Don't mess it up, right? Yeah, you got one shot. No, so we started Value Nation early last year. There's obviously a lot of attention through social and podcasts. It started as we want to try and educate, whether it was an LO, a realtor, or a borrower, what the appraisal process really was about. And honestly, it's evolved into something I think bigger than we thought it would ever going to be, quite honestly. A lot of the guests that we now bring in, they bring something to the table that's not just about the mortgage industry. Whether they're working with children or they're working with, what was the last one? They're working with hospitals. They're working, just in their community. They're trying to do something on the side to just better humanity and better their communities. Like that's really where it's just kind of morphed into that. I mean, we still bring back in the appraisal piece here and there,
right?
And we make it fun and light. I mean, we were just joking about our next outfits, for the next one. It's a fun. It's also kind of cool and a nice way for me and him to get out of our day-to-day piece of selling and working in appraisals and sit there and for an hour we get to be something different.
Yeah.
And you get that. I mean, you
love
do that all day.
Because from hosting this, I learned so much from all of the different guests. Like we joked at the start of it. I mean, I had a guy who, was the manager of Tone Loc, and I had an actual NASA scientist who's doing stuff in underwriting and now a pro football player, and the list would go on, and an accountant. And it's great to meet all of these people. And then I love what you said about and find their stories of how they're adding value to life and how they're adding value to their community and humanity, not just how do I make another buck. It truly is about people, relationships. Michael, what's the name of the podcast? Where can people find it? I want to make sure I give a huge shout out because I'm a big believer that podcasts are a great way to have people tell their stories and help all of us improve the communities around us.
Absolutely. Once again, it's Value Nation, hold the E, Value Nation. We're on all different platforms. We're on YouTube, Spotify, Apple Podcasts. I know we have an Instagram account that posts quite a bit of content, TikTok as well. Come find us, like, subscribe, check it out whenever you have time. I mean, honestly, having the guests really changed everything. We didn't know what we were doing. Like what we said when we first got into it, it was a bunch of episodes of me and Charlie. You could skip over the early episodes if you want. But we started to kind of find a groove once we started bringing people on and realize like this is where it's at. This is where the gold's at. And so if you keep bringing fresh faces from different parts of the whole industry, I mean, it just keeps going and going and going. It's been a lot of fun.
I absolutely love it, guys. You guys are welcome back anytime. We could be talking for hours, but we're almost winding down. The last thing I want to end with is kind of what do you see on the horizon? What's kind of nationwide focused on? How are you guys going to continue to work on adding value to the industry? Who wants to take that one?
Right. You
Boss?
Go?
Yeah, go ahead.
Oh, yeah.
Yeah, he's ready.
Because I have the new title. So as I mentioned before, we're still looking to grow into markets that have been traditionally, we'll just say, kind of difficult, right? to find an appraiser, to train extra appraisers, that kind of thing. And so we're always on the lookout for that. And then as we finish off this year in a a positive way for us as a company, we're going to continue to work that in 24, grow our sales team so that we can have more faces out there for people to meet and get to know us as a, like we said before, like on a personal level. And because like we said, people buy from people, and our company is reinvesting in us, which has been fantastic. So I'm looking forward to that.
Outstanding, guys. You guys shared a wealth of information. I'm sure our listeners are going to go back and listen to it, take down notes, check out their podcast. Make sure you schedule time to meet with them in West Palm Beach, schedule time to meet with them in Philly at MBA Annual. I can't thank the two of you enough for being guests on this episode of the Fintech Hunting Podcast.